Who's with us. Sonia is with us again. Sonia, what do you expect from Tata Motors?
Well, from Tata Motors, as you rightly pointed out, the most important internal to focus on is the Jaguar Land Rover margins. And this time around, the expectation is that the margins will come in at around 13% or so. On the EBITDA front as well, the key EBITDA number to watch is about £1,000 or so, £1,000 million. And if anything comes above this 13% margin level or above £1,050, then that's something that the street will take to very kindly. Now, if you look at the JLR core numbers, a 20% top line growth is what we're expecting. This quarter was stable for JLR. We did see a 6% volume growth because of the currency movement that will result in better realizations for the company, and that could result in a 20% top line growth for them. On the margin front, 13% as I mentioned. Same time last year, if you compare it, then the adjusted figures were 16.2%. Adjusted for the Takeda recall that they saw, they had a big cost involved, but the company adjusted for that. If you add that cost back, then 13% versus 13.5% same time last year. So largely flat on a year-on-year basis is what you can expect. If you look at the JLR margins, purely on the basis of what they've done with respect to the JLR volumes, volume growth overall of 6%. We don't use the China JV volumes in calculation of the margins because you have, China JV, which is a separate subsidiary that's taken below the EBITDA line. So X of the China JV, it's about a 6% growth. We won't look at the standalone volumes too much because the standalone numbers are just about 10% of overall volumes.
Okay, all right, Sonia. Thanks very much for that. Well, that's on Tata.